Last week, O&R told you about a program in which 17 companies are diverting tax withholding payments from employee paychecks to help pay for plant expansion and equipment purchases. O&R's Dick Pryor spoke with Oklahoma Watch reporter Warren Veith and Mark Lash about the program. Here's more from that interview.
Warren, how does this program operate?
Dick, we found that 17 big companies like Hitachi and Goodyear and Michelin are receiving the monthly or weekly payroll deductions that their employees are paying for state income tax and using that money to pay for plant expansions, equipment purchases, and so forth. Last year, these diversions cost the state $11 million. By the time these projects are totally completed, they'll cost $89 million plus a little bit of interest.
And all of this money comes from their own employees withholding taxes.
Yes, it does, but it doesn't hurt the employees in the end. The state still pretends they've paid their state income taxes, but the money for some period of years goes right back to the company. They use it for these projects, and as best we can tell, the employees don't even know.
Mark, how did you uncover this program? It wasn't easy.
It actually wasn't, and I wasn't even looking for it. I was looking into a different program, the Quality Jobs Incentive Leverage Program, which is funded in a similar way. And I was tracking the accounts in the Oklahoma Tax Commission annual reports of funds being transferred to support that program. And I found that starting in 2010, which is when this program started, that extra money was being put in that account. I asked the Tax Commission why. They really didn't tell me, but eventually found out through the Oklahoma Development Finance Authority that it was for this economic pooled finance program, but it wasn't labeled as such in the Tax Commission annual reports.
So how are records kept about this program?
That's a good question. There are special accounts set up in the state treasury, one for each company who gets this money, and that company's withholding taxes are transferred into those individual accounts. Those accounts aren't available on a website. I eventually had to ask the state for a chart of accounts to track down these companies' names and then ask for specific transactions associated with those accounts.
Dick, I think there are three critical things about this program. One is the effect on the state. This is money that the state could have appropriated for things like schools, prisons, health programs, and it can't. It's giving that money back to these companies. Second is the almost complete lack of transparency on these programs. And finally, there's the issue that's raised by all of these tax incentives that the state does. It's very difficult to determine whether or not the companies would have done these projects anyway, even if they hadn't gotten this money.
The companies are saying that it helps them.
They are. And the first one done, Hitachi, there's an economic development in Norman who makes a very persuasive case that if that incentive had not been provided, Hitachi was going to shut down that Norman operation, move the whole thing to Indianapolis, and all the existing jobs would be lost. Instead, they got the money and they've created 100-some jobs.
I think in programs like this that there are some cases where it was a good thing and some cases where it wasn't a good thing or wasn't necessary. The problem is we don't know because we don't have all the information. I think the Hitachi case, based on what we know, and they were very forthcoming in talking about this, it appears like it was a good investment for the state. For some of these other companies, either it appears that it was not, or we just don't know because we don't have the information.
We should point out here, Dick, that some of the true believers, the people who created these programs and who defend them today, they maintain that over the long run, they don't cost the state anything because they have seen projections or accept the argument that the projects wouldn't have happened otherwise, and that new employees will pay more taxes and that more business will be created for spin-off suppliers and things like that, and that ultimately we get back as much as we paid out. But there are a lot of people who question that, including in many economists.
Outstanding reporting. Warren Veith, Mark Lash from Oklahoma Watch. Thank you.
Thanks,
Dick.